Hi, everyone, and welcome. My tax accountant is here to talk about something that can cause a whole lot of stress: HMRC payment plans. If you've ever been hit with a surprise tax bill that made your jaw drop, well, this one's for you. We're going to break it all down and help you take back control. Let's jump right in. So, let's talk about that moment. You know the one, you log into your HMRC account. Or maybe you get that dreaded brown envelope through the letterbox. You open it up and boom. The number staring back at you is, wow, way bigger than you thought. That sinking feeling in your stomach? Trust me, thousands and thousands of people feel that exact same thing every single year. But here's the thing I really want you to hear. You are not alone in this. And that big, scary number, it's not the end of the world. Far from it. You've got options, real, concrete options. And that's exactly what we're going to explore together today, step by step. All right, so here's the plan. We'll start with why these tax bills can be such a shock in the first place. Then we'll cover the first, most important thing you need to do: check everything. After that, we'll look at your two main payment options, some common traps you'll want to avoid, and then we'll wrap it all up with the key takeaways. Sound good? Let's go. Okay, first up, the unexpected tax bill. So, what's going on here? Why are so many people getting hit with these surprisingly high bills? Well, a big part of the answer actually comes from the wider economy and how it's affecting all of us, often without us even realizing it. The main reason has a kind of nerdy name. It's called fiscal drag. But don't worry, the idea is actually pretty simple. Imagine this. You get a pay rise to keep up with the cost of living. Fantastic. But here's the catch. The government hasn't moved the goalposts. The tax thresholds haven't gone up with inflation, so your pay rise can actually push you into a higher tax bracket. You end up paying more tax even though you don't actually feel any richer. It's a sneaky one. And here's the proof in the pudding. Have a look at the numbers for the 2025-26 tax year. Your personal allowance, that's the amount you can earn completely tax-free, is stuck at £12,570, and the basic rate band ends at $50,270. Because these numbers are frozen, while wages are trying to keep up with inflation, more and more people are finding themselves tipped over into that higher 40% tax bracket. It's a numbers game, and right now, it's catching a lot of people out. And on top of all that, you've got the deadlines, right? The tax clock never stops ticking. You've got that second payment on account due on the 31st of July. Then you've got to register for self-assessment by the 5th of October if you're new to it. And then, of course, the big one. The deadline to file your return and pay what you owe is January 31st. Keeping these dates front of mind is just, well, it's non-negotiable if you want to stay on top of things. Which brings us to our next section, and honestly, this is the most important part of this whole guide. When you get that bill, your first instinct might be to panic about how you're going to pay it. But hold on. Before you do anything else, there's one thing you absolutely, positively have to do first. And here it is. This is the golden rule. Before you even think about setting up a payment plan, you have to make sure that number is 100% correct. I know, it sounds so obvious, right? But you would be absolutely shocked at how many people just pay it without checking. They end up overpaying because of simple mistakes that could have been easily fixed. So let's get practical. Here's a quick checklist for you. First off, is your tax code correct? You can check this right in your personal tax account. Next, think about your expenses. If you're a freelancer in London, for instance, have you claimed for everything you're allowed to? Your travel, your software, your home office costs? Have you looked for those little reliefs that are easy to miss, like the marriage allowance or the property allowance? And for those in specific situations, if you're in construction, are your CIS deductions showing up? If you also have a job, is your PAYE income reported correctly? These are the questions you need to be asking. And look, this isn't about saving a few quid here and there. This can make a massive difference. Take Aisha, a landlord from Leeds. She got a bill for £12,000 and was understandably worried. But she took a step back, went through everything, and found a huge mistake. She'd forgotten to claim her mortgage interest relief. Just correcting that one thing cut her bill by £2,500. £2,500. That's the power of verification. All right, so you've done your homework, you've verified the bill, and the number is correct. But it's still a big chunk of cash to pay all at once. So what now? Well, now we can talk about your options for actually paying it. Let's look at how you can spread the cost. Basically, HMRC gives you two main paths, and they're for very different situations. Think of it like this. You've got the budget payment plan, which is for getting ahead of your next tax bill. It's proactive. Then you've got time to pay, which is for dealing with a bill you already have. That's reactive. Knowing the difference is absolutely key. Let's talk about the budget payment plan first. The best way to think about this is like setting up a savings pot specifically for your tax. You decide to pay a set amount every week or every month, and it goes towards your next self-assessment bill. The best parts? It's totally flexible, and there's no interest to pay. It's a fantastic way to smooth out your payments and avoid that massive lump sum panic in January. And here's a little pro tip for you. The smartest time to set up a budget plan is literally the day after you've filed your current tax return. Why? Simple. It gives you the longest possible runway, a full 12 months, or close to it, to save up for the next bill. That means smaller, more manageable payments each month. It's a no-brainer, really. Okay, now for option 2, time to pay. This is for the bill you owe right now. And this number on your screen, £30,000, is the magic number. If your tax bill is 30 grand or less, you can almost always set up your payment plan online, no phone calls, no waiting on hold. For a busy freelancer or a small business owner, this is frankly a game changer. And the process is surprisingly pain-free. There are just 4 simple steps. First, and this is crucial, you have to have filed your tax return. Can't do it before that. Second, you log into your HMRC online account. Third, you'll see an option to set up a payment plan, where you can propose how much you can afford to pay each month. And finally, once it's all agreed, you just set up the direct debit. That's it. Done. All right, so you know your options, but it's not always that straightforward. There are a few common tripwires that can catch people out. So let's do a quick-fire round of the biggest things to watch out for. First up, a huge heads up for anyone watching in Scotland. The tax bans we showed earlier, they don't apply to you. Scotland has its own unique set of tax rates and bans. If you use the UK ones by mistake, your tax calculation will be completely wrong. So please make sure you're using the correct Scottish figures. Next trap, the emergency tax code. Ever seen something like 1257L, W1, or BR on your payslip? That's probably an emergency code. It often happens when you start a new job. And what it usually means is that you're not getting your tax-free personal allowance. The result? You're paying way too much tax. The fix is simple. Check your payslip, and if you see one of these, get on the phone to HMRC. And here's a trap that catches out so many families. It's called the high-income child benefit charge. Basically, if you or your partner earns over £60,000 a year, you have to start repaying the child benefit you get. It's done through your self-assessment, and for a lot of people, it's a nasty surprise that adds a huge amount to their final tax bill. Now, on the flip side of traps are missed opportunities. This chart breaks down the most common places people forget to claim tax relief. Look at that big chunk for pension contributions. It is by far the biggest one. But there's also relief for professional subscriptions, working from home, so many things people miss. It's basically free money you're leaving on the table if you don't claim it. So, why is it so important to deal with this and not just bury your head in the sand? This number right here, 8%. That is the interest rate HMRC charges on late tax. Let me put that in real terms. For every £1,000 you owe, that's another 80 quid a year in interest alone. It adds up fast. Setting up a payment plan puts a stop to that. Doing nothing is literally the most expensive option. Okay, we've gone through a lot, so let's wrap this up by boiling everything down to the absolute essentials. Here's what you need to do next. It really comes down to this simple 3-step plan. Number 1, verify. Always check the bill is correct before you pay a single penny. Number 2, choose. Pick the right plan for your situation. Budget plan for getting ahead, time to pay for catching up. And number 3, act. Get in touch with HMRC and get a plan in place fast. Don't delay, because that's when the penalties and interest really start to bite. So, I'll leave you with this final thought. After hearing all this about frozen thresholds, missed expenses, weird tax codes, is it possible? Could you be paying more tax than you actually need to without even knowing it? Look, if any of this feels overwhelming or you're just not 100% sure, that is totally okay. This stuff is complicated. And that's where getting some professional help can make all the difference. Someone who can go through your numbers and make sure everything is spot on. And that's exactly what the team at My Tax Accountant is here for. If you want an expert eye on your tax bill or help navigating your options, just get in touch. You can reach them on WhatsApp or by phone at 07854 255 375. Or, if you prefer, just drop an email to info@mytaxaccountant.co.uk. I really hope this has helped clear things up for you today. If you found it useful, please do hit that subscribe button on the My Tax Accountant YouTube channel. We've got plenty more simple, clear guides to UK tax coming your way. Thanks so much for watching.